A very good morning, friends. So we are almost at the close of the year, and 2024 is about to begin. And I think it's a good idea to learn new things as well. So I hope everybody is doing well. And we've got a series of lectures now coming on consolidation of financial statements. Well, previously we had covered the concept of Ind AS 103, which was talking of business combination. And there itself, I'd given you a chain of thought in terms of when does the consolidation standard trigger. And we had seen that once there is a control over a business of another entity, it not only triggers Ind AS 103, but also triggers two another standards. One is on a consolidation, which is done year by year, and that is Ind AS 110. And another standard which is also triggered year by year, and that is making a separate financial statements, that is Ind AS 27. Well, we'll be covering the concept of Ind AS 27 later. Right now, the focus is in terms of Ind AS 110 that talks about consolidate financial statements. Now, there are a couple of things which comes to my mind as we start the standard Ind AS 110, because I know, since you've all done consolidation at the intermediate level, so there will be certain concepts which might be there at the back of your mind. So I think what I need to do a little washout in terms of what you already know. Yes, you heard me correct, that we need to wash out certain concepts which you already have at the back of the mind and then take the journey forward. So there are a couple of new things which you're going to learn in terms of consolidation. The techniques of consolidations might be similar to what you have done under Accounting Standard 21. But of course, there are a lot of new things which you're going to learn, especially when it comes to the assessment of control. So I think let's begin the journey. And I think, first of all, let's give you a few clarifications to begin with. So I think, first of all, give you a few clarifications. And good morning to all of you once again. And I think let's begin the journey. Well, at the first instance, what comes to my mind is when I'm looking at Ind AS 110, the name of the standard is called Consolidated Financial Statements. Now, hear me very carefully, because I want to give you, first of all, a little comparative position in terms of what you've done at intermediate level and what you're going to learn at the final level. So let's give you a little comparative position. Well, if you go back to the intermediate stage, for the purpose of consolidation, you've done Accounting Standard 21. And now at the final level, you're doing a consolidation as per Ind AS 110. So at the first instance, I like to pinpoint something. In Accounting Standard 21, what we also called ICAI, because when you look at accounting standards, it is also commonly called as ICAI. So when I'm giving a reference to accounting standard, we're also giving a reference to what we call ICAI, the Indian GAAP, generally accepted accounting practices. Now, here the concept of control was completely, you can say, ruled based. The assessment of control was completely a ruled based assessment. Even today, if you look at the Companies Act 2013, the concept of control which is given in the Companies Act is completely a rule-based assessment. So not only Accounting Standard 21, but I would say even if you look at the Companies Act, 2013, the concept of control assessment is completely a rule-based. Now, what do I mean by a rule-based assessment? The rule-based assessment means that you're simply looking at, do you have more than 50% stake in a company? Do you have more than 50% voting power in a company? The concept of control was completely a rule-based assessment, that if you've got more than half, that is 50% plus voting power in a company, generally by virtue of equity shares, you control the company. So this control-based assessment was purely looking at a percentage, that if you've got more than I did not say 50%. I said more than 50%. So the moment you've got more than 50% voting power in a company, we used to say that yes, you've got a control over the investee company and it establishes a parent-subsidiary relationship. Now, look at the contrast in terms of Indian accounting standards. There is Ind AS 110. The control is no longer a rule-based assessment. So if you look at the assessment of control under Ind AS, it is completely what we call a principle-based assessment. It is purely what we call a principle-based assessment. So when you're looking at a principle-based assessment, here we're not looking at any percentages. Well, generally, mind the words generally, yes, if you say that you've got more than 50% voting power in a company, the chances are highly likely that yes, you control a company. But there is a possibility that even if you've got more than 50% voting power in a company, you may not have a control. And interestingly, maybe you've got less than 50% voting power in a company, still you've got a control. You heard me correct. When I look at a principle-based assessment, there is a possibility you've got more than 50% voting power, still there may not be a control. You've got less than 50% voting power in a company, still there may be control. So since it is completely a principle-based assessment, we don't start looking at any kind of percentages. Generally, of course, if you've got more than 50%, it is implied that there might be a control, but we don't rule out a possibility that you've got more than 50, there may not be control. You've got less than 50, there still might be a control. So this is one thing which you need to keep in mind as we look at the consolidation standard, that the ICAI was largely a rule-based assessment. And even the Companies Act today is supposed to be a rule-based assessment, looking at a given percentage and deciding a control. But if you look at the Indian accounting standard, it is a principle-based assessment. Now, having understood the difference between the Companies Act as well as the Indian accounting standard in terms of control assessments, a couple of questions also comes to the mind. Now, let me tell you something very interesting indeed. Because at the end of the day, you're looking at that a consolidation will be done because every company is required under the Companies Act to follow the Indian accounting standards in terms of preparation and the presentation of the financial statements. So now the question rises that if there is a contradiction in terms of the assessment under the Companies Act, and if there is a contradiction in terms of what the Indian accounting standard says, whom am I supposed to follow? In this particular case, there has been certain clarifications which are given in the education material. And I think before we take the journey in terms of assessment of control, let's give you clarifications which are given in the education material. I know questions coming to your mind, sir, are we required to do the education material as well? Well, to the extent the questions are relevant for your levels from the examination point of view, of course, we're going to take an insight from the education material as well. So even when I was discussing the concept of business combinations, a couple of things I had given you which are based on the education material as well. So I think let's first of all take you to the insight in terms of what are the clarifications given under the education material for this particular Ind AS. So I'm carrying a few clarifications with me which are based on the education material. Okay, so I think let's share that to you. And this is 2-3 questions which I am going to cover. Let me just, I think, first of all, zoom this across. And I guess let's have a look at the question number 1 to begin with. So let's begin with the question number 1. I hope this is pretty visible indeed. I think so. Okay, so let me, I think, first of all, read out a small little question to you and give you certain clarifications at this end. It says, Ind AS 110 on consolidated financial statements as well as the Companies Act requires the company to present consolidated financial statements. However, under both the regulation criteria It says for determining the relationship with other entity, whether it is a subsidiary or a joint venture or an associate companies, they are different. As I said, if you look at the assessment under the Companies Act, not only the control, but also the joint control, but also the significant influence under the Companies Act is different, rule-based, and under the Indian accounting standard is different, that is principle-based. Whether a company should follow the requirements of Ind AS 110 or the Companies Act 2013 for the purpose of preparation of financial statements. So a pertinent question comes into the picture that since the Companies Act and the Indian Accounting Standard could lead to different conclusions about control or about a joint control or a significant influence, which particular criteria am I supposed to follow? So there was a clarification given. If you look at the rule number 4A of the Companies Accounting Rules 2014, so there is a rule which is given in the Companies Accounting Rules 2014, Rule 4A. For the purpose of preparation of financial statements, the definitions and other requirements given under Ind AS should be considered and applied by the entity. So when you're looking at the definitions, when you're looking at the other requirements, the Rule 4A very clearly tells you that you are required to follow what is given under Ind AS 110. Accordingly, a company should follow the requirements prescribed under Ind AS 110 for the purpose of preparation of financial statements. Well, I think you got a general clarification, but let's have a look at a little more specific input example as well. So we've understood that Rule 4A of the Companies Accounts Rule 2014, which also endorses the power to the Ind AS, makes it very clear that in a given situation, the definitions and other requirements under Ind AS would take, you can say, a forefront. Now, let's have a look further on the question number 2. So there is a very interesting example which is given in question number 2, and I think let's read the facts to you. So I'm just going to read the facts of the question number 2, and this will give us a further clarification of what we have just read in terms of the question number 1. This is again given in the education material. It says AB has got a majority voting shares in several companies. A majority voting shares as per the Companies Act would generally give you a control. All of these investee companies qualifies as subsidiaries of AB within the meaning of the Companies Act 2013. All of these investee companies also qualify as subsidiaries within the meaning of Ind AS 110 as well. It says since all the decisions are taken by these companies on the basis of simple majority of votes. So there are a couple of companies which are meeting the criteria of control under the Companies Act, and they're also meeting the aspect of control under Ind AS 110. No disputes. It says AB has got a 48% voting shares in Z, as AB neither controls the composition of the board of directors, nor it exercises or controls more than half of the voting power. Therefore, Z does not qualify as a subsidiary within the meaning of the Companies Act 2013. Now, the Companies Act 2013 has given us 2 inputs. Number 1, either you control the majority composition of board of directors, or you've got more than 50% voting power in a company. So in this particular case, it says you've got a 48% stake in the company, so you've got less than 50% majority. Neither it controls the composition of board of directors, so as per the company's law, neither a voting power criteria nor controlling the composition of board of directors is met, therefore not a control. Then he says the voting rights in Z other than those held by AB are held by thousands of shareholders, none of which has got more than 1% voting rights. Now, don't get worried on what he's writing at this stage, because we learn the assessment of control under Ind AS 110 later. But just to give you a very basic input. The Indus takes a very important note. Let's say I am the majority stakeholder of a company, which is 48%. It's below 50, but at the same time, I am almost the largest shareholder of the company, and rest of the shareholders have got nothing more than 1% stake. So comparatively, if you look at my positions in the company, I would say that I, being the largest shareholder of the company, I might be in a position to control the company. Because if you look at my position relatively compared to the other investors, I am a much bigger investor. Now, how do we do that assessment? Don't worry, we'll learn that later in Ind AS and 10. So it says the voting rights in Z other than those held by EB is held by thousands of shareholders, none of which has got more than 1% voting rights. None of the shareholders have got any arrangements to consult any other or to take any collective decisions. On the basis of the relative size of the other shareholdings, EB determines that 48% is sufficient to give it a de facto control. Now, what is the de facto control? We'll see within the meaning of this term under Ind AS 10. Consequently, it qualifies as a subsidiary under Ind AS 10. So as per the Companies Act, the control is not present, but as per the Ind AS 10, the control is present. So now the question arises, do we consolidate keeping the rule number 4A of the Companies Account Rules 2014 into account? And the answer is a yes. As we've just read a clarification in Rule 4A, since there is a contradiction in terms of things, the definitions which are given in Ind AS 10 would apply. So which means in this particular case, if I'm looking at the definitions of control given under Ind AS 10, that is going to prevail. So it says Z Limited qualifies as subsidiary in preparing consolidated financial statements. Should AB also consolidate Z Limited or not? And I think I've already given you the answer, yes. So there has been a contradiction in terms of the assessment under the rule-based assessment of the Companies Act and the principle-based assessment under Ind AS 10. Therefore, we are going to follow the definitions under Ind AS, and Z, even though not a subsidiary under Companies Act, is going to be consolidated as a part of the group. Okay, so this was one clarification which I wanted to give you. So this is one input. Let's give you another clarifications as well. Well, I think before I come to this morning time, I think sometimes the electricity takes a backseat. I think I said too many technical things in the morning. The XIT department sometimes gets annoyed on my. Okay. Can you able to hear me, friends? Am I audible and the video is visible, I guess? Okay, wonderful. Okay, let's, I think, start back. So I was giving you a clarifications with reference to the Companies Act as well as the Indian Accounting Standard. And before I give you a further clarification, let me just quickly consolidate what I just mentioned in terms of the rule number 4E of the Companies Act accounting rules. So we made it very clear that if there is a contradiction under the Companies Act as well as the contradiction under the Ind AS in determining a control, of course, we are going to take a precedence over Ind AS 110. So whatever Ind AS 110 gives us the definitions and the requirements, they are going to prevail. Now, there is another clarification, but before I go to that particular clarification, I would now like to take you further. So right now, I've not given you anything on how a control assessment under 110 is done. I am just giving you a background of certain clarifications before we formally, start off with this standard. Okay, so let's go to the next clarifications with you. Now, the next input before I take it further, let me first of all give you a basic input before we go to the question number 3, which is clarified. Okay, let me just clear this bit. So this is now a second clarification which I am giving you with reference to the consolidation, and this is again given in the education material. Okay, I think somebody was asking me, so where do we get this education material? Well, if you want to download this, it's on the ICAI website. It is on the Accounting Standard Board page where you can get this education material as well. But not the entire material is to be read because many of things are incorporated in the study material as well. But if you want to refer it otherwise, it's there on the Accounting Standard Board webpage. Okay. Now, let's take it a little further and give you another clarifications at the moment. Another input which is given, and many a times people come across this even in a practical life situation, and the question is, sir, if we control a particular partnership firm, for example, or if we control, let's say, an LLP, for example, am I supposed to consolidate a partnership firm or LLP as well? Well, if you look at what Ind AS 110 says, I'll just like to quote unquote what Ind AS 110 says. There is a para number 2 of Ind AS 110, and I've darkened the words clearly. It says any entity. The word is very clear. It says any entity that is controlled by an investor is its subsidiary, irrespective whether such an entity is a company or another type of entity such as an LLP or a partnership firm other than an LLP. Well, this clarification was not given in para number 2. The para number 2 stops at the point where it says that any entity that is controlled by the investor is its subsidiary. The word which is used in Ind AS 110 is called any entity. So when you use the word entity, we're not making a reference only to a company. The word entity would mean not only a company, but also a LLP and also a partnership firm which is other than a LLP. So which means that if as an investor, you control any entity being a company or LLP or a partnership firm, is it required to be consolidated under Ind AS 110? The answer, of course, is a yes. Okay, let me now read the question. It says whether a company H Limited is required to consolidate the subsidiary which is an LLP or a partnership firm. And would your answers be different if that LLP was an associate or a joint venture? Well, at this stage, let me also clarify. The previous clarification in terms of contradiction of control, joint control, and significant influence is going to be applicable to all relevant standards. I think, let me make the position clear. Now, when you're looking at the concept of control, Ind AS 110 applies. When you're looking at a concept of a joint control, Ind AS 111 would apply. When you're looking at a concept of a significant influence, Ind AS 28 would apply. And all these standards 110, 111, as well as 28 is based on a principle-based assessment. So if you look at the assessment of either a control or a joint control or a significant influence under the Companies Act, rule-based. And if you're looking at the assessments under the Ind AS respective standard, it is principle based. So if there is a contradiction, what do we hear? What do we apply? Ind AS. That is one clarification. Second, we said that if you're looking at a situation where you are controlling a company or you're jointly controlling a company or you're having a significant influence of a company, LLP, or it is a case of a partnership firm, well, in all these cases, the consolidations as per respective standards would apply. So we are required to consolidate a subsidiary, we are required to consolidate a joint venture, we are required to consolidate an associate as per the relevant standards, irrespective the investee company, is supposed to be a partnership firm or an LLP. That is a second clarification. I've got another clarification as well. Don't worry, we'll pen this down as well. So let's, I think, first make a quick notes to you on certain clarifications. So far, I've given you a total of 2 clarifications. Let me just, I think, document this bit, and then I'll give you another third clarification as well. So let's pen this down. So we've got a clarification number 1. So we've got a clarification number 1. So we can say on one hand, we've got the Companies Act. On one hand, we've got the Companies Act 2013. And on the other hand, we've got the Ind AS. So we're looking at the Ind AS with reference to control. We're applying Ind AS 110. We're looking at the aspect of a joint control. We're looking at Ind AS 111. We're looking at a significant influence. We're looking at Ind AS 28. So this is just to give you a clarifications. What are the relevant standards applicable? So this is the relevant Ind AS for a control, joint control, and a significant influence. So the clarification is that if there is a contradiction, so the clarification is, if there is a contradiction, underline the word contradiction, we will follow Ind AS. We will follow the Indian accounting standards for this purpose. In the brackets, let me write down Rule 4A, which is of the companies, Rule 4A of the companies accounts, Company Accounts Rules 2014. Just for your reference. So this is based on the Rule 4A of the Companies Account Rules 2014. That's one clarification. Now, let's give you another clarification as well. So we've got a clarification number 2. So clarification number 2. And the clarification number 2 is, am I supposed to consolidate other than a company as well? So yes, we consolidate. We need to consolidate. We need to consolidate. And when I say consolidate, it is with reference to all the 3 standards again, 110, 111, and 28. So we need to consolidate not only a company, but also an LLP and also a partnership firm other than LLP. So also a partnership firm which is other than LLP. Right, so these are 2 simple clarifications which I thought we'll start with. There is another input as well. So I think let's give you a clarification number 3. Well, today you're going to get a lot of information which is going to be simple, but it is also necessary that it also gets registered in your mind. Not a very technical day today, though a little later we'll start a little technical discussions, but first we are doing some warm-up exercise for the day. Okay, so that is 2 simple clarifications. Now it gets inserted in the mind. Contradiction under the Companies Act and the Ind AS. We're going with the Ind AS. Are we consolidating other than a company as well, a partnership or LLP? Yes. And these clarifications equally applicable to all relevant consolidation standards, whether it is a consolidation of a subsidiary, 110, or it is a joint venture, 111, or it is supposed to be an associate, that is Ind AS 28. Right, friends, so far, so good. Now, let's take it further. Okay, I think I got a question from Shankara. Sir, can you please give us a brief insight of the difference between a partnership firm and LLP? Why do certain people choose LLP form of business rather than a partnership firm? Well, I think I'll just give you a very basic difference between a partnership firm as well as an LLP. Well, if you look at a traditional partnership firm, it has got an unlimited liability concept. A normal traditional partnership has got an unlimited liability concept. But if you look at a limited liability partnership, it gets the advantage of a company where the liability of the partners is limited the way it is limited in a company. That is one. Now that brings us to the question, that what is the difference between the companies and the LLP? Well, if you look at the companies, then it is governed by a separate act, that is the Companies Act. And if you look at the LLP, it is governed by a different act, that is the Limited Liability Partnership Act. And I would say if you look at the procedural formalities which are attached as far as a company is concerned, it is too cumbersome and time consuming at the same time. So people today, prefer that if you're going to create a company, you do get an advantage of a limited liability, but at the same time, there is too much formalities to be complied with. The kind of legal formalities which you need to comply in terms of company sometimes might be, too expensive for a medium-sized company. Therefore, you can say if you look at a company, and if you look at a partnership firm, the mid approach becomes an LLP. You get the advantage of a company being limited liability, and at the same time, you also get the advantage of not complying with too many formalities which are there in terms of a company setup. Right? So that was in a very brief telling you why people would prefer establishing an LLP. Okay, and I think Mansha, you got a question. So just downloaded education material. The edition is February 19. Yes, you're right. It was a long time back that this education material was issued and clarifications were done. Yes. Okay. So this was another clarification. Now let's go to the clarification number 3. Now, interestingly, you've done one particular Ind AS, and I think it's time to connect you with that Ind AS as well. Now, here again, I am giving you a comparative position. I'm giving you a comparative position under ICAI, that is Accounting Standard 21, and under the Ind AS 110. Now, hear this clearly. This is again a clarification which is given in the education material as well, though there is something which is apparently given in the standard also. So let me put this as a clarification number 3. Let me put this as a clarification number 3. And just like my 3-step models, I've given you a total of 3 clarifications only. So this is my third and the last clarification before we start with the standard formulae. Now, if you look at Accounting Standard 21, there were certain exceptions. There were certain exceptions where consolidated financial statements were not required. So in this particular case, there were certain exceptions where they said, rather I would say they were exemptions instead of calling them as exceptions. The standard very clearly said that you don't need to consolidate. You're not required to consolidate. And that was the first, one of the exceptions was that the control is temporary. So one of the exceptions where consolidation was not required was that the control is purely temporary in nature. Now, what do you mean by a control is temporary? As an investor, I got control over the company, but I have intentions to dispose of the subsidiary in the near future. So we do acquire a control over the company, but I have no intentions to keep that investment. I'm planning to sell that investment in the near future. So in this particular case, consolidation was not required. Now, what does Ind AS 110 says? That if you say that you are going to dispose of the subsidiary in near future. In this particular case, you're going to dispose of the subsidiary in the near future, then what do you do? if you're going to dispose of the subsidiary in the near future. Now, you would recall that there is a standard Ind AS 105, which talks about non-current assets held for sale and discontinuing operations. And trust me, you would recall that if you get a control of the company which you are going to dispose of in the near future, it is an NCA held for sale. So the moment you acquire a control over a subsidiary company, even though it is temporary in nature because you plan to sell off the investment in the near future, it becomes a non-current asset which is held for sale under the purview of Ind AS 105. And in this particular case, consolidation will still take place. But let me only tell you one thing, that the way the consolidation will be done in this case is not going to be the regular way of consolidating a subsidiary. So you can say that if a company acquires a control over another company, which is going to be disposed of in the near future, consolidation will definitely be done. But this consolidation is not going to be the normal way of consolidating. You will consolidate keeping the principles of both 105 as well as 110. Now you would say, sir, are we going to do a question later where you're going to show us how the consolidation of a subsidy which is classified as NCA held for sale done? I don't think so, because there is no questions which is given so far in the study material on that area. But I guess if you get time, I might do it, but I'm not sure. I'm not promising anything. It's not a constructive obligation which I'm triggering at the moment. But yes, the technique for consolidation is different. So in this particular case, the consolidated financial statements is of course going to be prepared, but it is going to be prepared both using Ind AS 110 as well as Ind AS 105. Because the moment you consolidate a subsidiary which is going to be sold in the near future, the consolidation is done on, a one line. You're going to show the net assets of the subsidiary company as a single line. So consolidation will be done in a slightly different manner. So consolidation will be done, but this consolidation will be, you can say, different from the routine consolidation. It's going to be different as compared to the routine consolidation. So that becomes a little special kind of a case, right? Okay, so let me now consolidate the picture to you. I've not given you anything technical since morning, just a few clarifications to begin with. Now, there are three things which I've given you. Let's get this clear once for all. Number one, when you're looking at the control or a joint control or a significant influence, the assessment under the Companies Act is rule-based and the assessment under the relevant standards is principle-based. So there could be a contradictions between the two. And if there is a contradiction, I am supposed to follow the definitions as per Ind AS itself. One. Second, we are required to consolidate all subsidiaries, and this would mean that I am required to consolidate an investee company, irrespective it is a company or it is LLP or it is a partnership firm other than LLP. And this clarification again goes for control, joint control, and a significant influence. And finally, a third clarification, and that is, if you acquire a control which is temporary in nature, ICAI would not require you to consolidate, but under Ind AS, consolidation is mandatory. Even though the control is temporary, you've got intentions to sell off the subsidiary in the near future, it gets classified as NCA held for sale under 105, and the consolidation will still be done. But this consolidation is going to be slightly different as compared to the normal consolidations of any subsidiary for that matter. Okay. So I guess so far so good. I guess this clarifies everything. Okay, and Mansha sir, should we read a Bear Act also available on the MCA website? Not really required. I think if you just read what is given in the study material, it's been elaborated very well. So you can just concentrate on the study material, I would say. Okay, I think Tanisha, you had a question. So please pardon me for asking a silly question. Don't worry, questions are never silly indeed. Is the consolidation required for a sole proprietorship with 4 to 5%, 4 to 5 GST registered businesses under the same PAN for a tax audit or other purposes as well? as whether or not under Ind AS or the accounting standard? Well, I guess in this particular case, having a control over a sole proprietorship is difficult to make an assessment. How would a company say that you control an individual? Even if you look at the concept of Ind AS 24, which deals with related party, that's a good question, but let me clarify. If you've done Ind AS 24 as far as related party is concerned, you can see an individual can control a company. But do you see a reciprocal situation where, a company is controlling an individual? No. So I preclude the possibility of a company controlling a sole proprietorship. So I would say that a control could get established on a firm, it could get established on an LLP, or it could be a company. But proving a company controls an individual, I think, is out of the picture. So in this particular case, therefore, even in the education material, they're not talking of controlling a sole proprietorship because that would be an individual. Right? I guess that answers your question. And Nivetal, said, so could you say where the questions will be available? Well, these three questions are given in the education material itself. I think it's given at the very start. The initial 1 or 2, 3 questions which are given are dealing with these issues itself. Okay, you mean to say the questions which are dealing with the consolidation of 105 along with Ind AS 110, well, they are not given out here. But I'll try to get these questions. I have a few questions with me which deals with the concept of consolidation of 105 along with 110. So maybe I'll share those questions with you as we go forward. Okay, you're most welcome indeed. Okay. So this is the clarifications part done. Now, I think let's formally start with the standard. And we are starting with the standard, but there are some more clarifications awaiting. There are a couple of illustrations which are given in the study material on the area which I am about to discuss. Okay. Now, first of all, before I take it further, let's do some interesting discussions with you. Now, at this stage, don't worry, I'll be giving you the notes later. We'll be coming to the notes later. But first, I think let's give you a few clarifications. Now, please hear me very carefully what I'm about to tell you. The question arises, is consolidation mandatory? And the answer is yes. But there are certain exemptions and there are certain exceptions. Please mind the words carefully because I'm going to do my discussions in the next half an hour, 45 minutes. And then I'll be creating some permutation combinations to give you a team level of clarity. So consolidation is mandatory, but there are certain exemptions and there are certain exceptions which are applicable for consolidation. So can you tell us what is a difference between exemptions and exceptions? I think in the first instance, let me tell you what is a difference between an exemptions as well as an exception. So first, just let's appreciate this bit. When I use the word exception and when I use the word exemption, there is a difference between the word exceptions and the word exemption. So when I say the word exception, exception means that you are not required, but you may still do it. So exceptions in this particular case would mean that it is not mandatory. It is not mandatory. But if you want to still do it, you can. So I will tell certain companies there is no need, mind the words, there is no need to consolidate. But you want to consolidate, you can do that. I don't have a problem. Now, just have a look at the para number 4. It says an entity that is a parent shall present consolidated financial statements. This Ind AS applies to all entity except as follows. The word is except. The word is exception. So it says very clearly, this Ind AS applies to all entity except as follows. A parent need not present. Need not present. So when I say a parent need not present, I am telling them, boss, you've got a choice. So when I use the word exception, it is a matter of giving a choice. I'm not saying that you cannot consolidate. I'm not saying that you cannot consolidate. I am giving them a choice that if you meet these conditions, you've got a choice. You want to consolidate, please do it. You don't want to consolidate, don't do it. There is no problem. So the standard Ind AS 110 gives you a list of certain exceptions where the companies will get a choice of consolidating or not consolidating, provided they meet certain criterias and they meet certain conditions. Okay. Then comes the word exemption. Exemption means it is a mandate. It is mandatory in nature. You cannot consolidate. You cannot consolidate. I will not allow you to consolidate. So it's not a matter of giving a choice to the company, but it is telling them that you are not allowed to do this. You're directly telling them that you're not allowed to do this. So remember, we are going to cover two areas in terms of consolidation. So before we go to the control assessment, we need to understand that once a control is established, so once a control is established, how does a control assessment take place is my next agenda of discussion. But once you say that yes, a control is established, we need to get one thing very clear. What are the exceptions where a company is required? It may not, where a company is given a choice of consolidating or not. I tell them that you met the conditions. Now it is up to you. You want to consolidate or you don't want to consolidate. So we need to look at those exceptions. But there are certain exemptions as well where you're telling the company, you cannot consolidate. If you meet these conditions, you cannot consolidate. So there is a difference in terms of exceptions and exemptions. I hope I'm pretty clear with the terms. Now, it says in the para number 4A, I'm looking at the para number 4A. I'm just a little, fond of para numbers. So in my course of discussions, I'll make a reference to the para number, but you need not know the para numbers. That's perfectly okay. So I'm looking at the para number 4A. It says a parent need not present consolidated financials if all the following conditions are met. So there are a total of 4 conditions. If you meet all the 4 conditions, I give you a choice. You want to consolidate, you can. You don't want to consolidate, you may not. Now, before we go to the 4 conditions, I think I need to give you a thought process very clear, because many people tend to get confused, and trust me, I'm going to make you an expert in the next half an hour, 45 minutes on this area. Now, just keep 2 things in mind. A is got a control over B, that is situation 1. And A is got a control over B, and B is got a control over C. That is like situation 2. So this is like situation number 1, and this is like situation number 2. So A controls B and B controls C. So we know one thing as per our prior knowledge as well, that if A controls B and B controls C, we can say A also controls C. So in this particular case, by virtue of the fact that A is got a control over B and B is got a control over C, we always say that A controls C as well. Now, when you're looking at the para number 4A, mind you, when you're looking in terms of the para number 4A, you got to look at only situation number 2. The para number 4A is not talking of situation 1. And this situation number 2 is also technically called a chain holding. The situation number 2 is also technically called a chain holding, because you can see the chain, and the chain can be larger as well. It could be A, B, C, D, A, B, C, D, E, whatever. So remember, the concept of para number 4A is applicable only and only if there is supposed to be a chain holding. That's 1. Second, the para number 4B can be availed by B, which is the middle company. The para number 4A is not going to be applicable to the top company, but it is going to be applicable only to the middle company. So keep one thing very straight. When you're looking at the para number 4 clause A, in that particular case, you need to get a chain holding. That's 1. And within the chain holding, if you're looking at a choice, then it is available to the middle company, not to the top company. A will be required to consolidate B and C indefinitely. A will not get any choices in terms of consolidation based on this para. I might give him certain, exemptions later based on some other para. But at the moment, when you're looking at the exception applies only to the middle company under para 4A. I hope my words are very clear. Now, let's have a look at these four conditions which are given. It says it is a wholly owned subsidiary. When I say the word it is a wholly owned subsidiary, I'm looking at B. I'm looking at that B is a wholly owned subsidiary of A. So the first question you're going to put across to yourself is B a wholly owned subsidiary of A? That means entire shareholding of B is held by A. If yes, the first condition is met. So if you say that B is a wholly owned subsidiary of A, the first condition is met. Then it says, or it is a partly owned subsidiary of another entity. Now, there is also a possibility that A does not have 100% stake in B. Let's say it has got an 80% stake in B. Then there is something more to be done. If B is a fully owned subsidiary of A, the first condition is met. But if B is a partly owned subsidiary of A, you need to do something more. And what is that something more? It says, and all the other owners, have been informed and they do not object to the parent not presenting consolidated financials. So in a situation where A has got 80% stake in B and 20% stake is with somebody else, I would say that 20% with somebody else is called an NCI. You already know that. If I've got a control of the company, then the remaining percentage is held by what we call NCI, non-controlling interest. So if A has got a 80% stake in B, we need to get an NOC. I call it as a no objection certificate from the NCI. It very clearly tells you that it says if it is a partly owned subsidiary and all other owners have been informed, I informed the 20% and they do not object to the parent not presenting consol. So in this particular case, if B wants to avail the exception, then B needs to prove, number one, am I a wholly owned subsidiary of A? If yes, the condition is met. If he says, no, I am a partly owned subsidiary of A, I will tell B, have you informed the NCI? And they've given an NOC regarding the fact that you do not consolidate, they don't have an objection. So please inform the NCI, that is the other shareholders, that you're not going to present a consolidated financials and they've got no objection of you not presenting. Okay, that is condition one. Let's have a look at condition two. It says its debt or equity instruments are not traded in a public market. Basically, we can say that company B, debt equity securities are not listed. The moment a company becomes a listed company, there is a public interest which starts in that company. So the standard setters were very clear that the debt equity instruments are not traded in the market. So B is not a listed company. Then the condition number two is met. Then he says it did not file, nor it is in the process of filing its financial statements with Security Commission, SEBI, or other regulatory organizations. So I would put it like this, that it is neither listed, that was condition two, neither it is in the process of getting listed as well. So when it says it did not file, nor it is in the process of filing financial statements with SEBI, Securities Commission, or other regulatory organization. So I'm interested in condition number two, B is not a listed company. Condition number three, B is not in the process of getting listed as well. And then there is a condition number four. It says it's ultimate or any intermediate parent. Ultimate or intermediate parent. Now let's understand what is ultimate and what is intermediate. Let's take the chain larger. A's got a control in B, B's got a control in C, C's got a control in D. Now, in this particular case, let us say I'm applying the para number 4A to company C. Though para number 4A can apply to B as well and can apply to C as well, but let's assume that you're evaluating the para number 4A for the company C. Now, what does the clause number 4 says? Ultimate parent. Who is the ultimate parent of C? A, the top company on the chain. So A, I would say, is the ultimate parent of the company C. Or it says any intermediate parent. I would say B is the intermediate parent of C. So when you're looking at the fourth condition, it says the ultimate parent, the company on the top of the chain, or any intermediate parent produces financial statements that are available for public use, one, and they comply with Ind AS, in which subsidiaries are consolidated. So there are two sub-conditions under the fourth condition, and that is that either the ultimate parent A or the intimate parent B is producing financial statements, number one, which are available for public use. And number two, these financial statements are in compliance with Ind AS, in which either subsidies have been consolidated or measured at FPTPL. I think let's not get into that at this stage. So I think we've got a simple four set of conditions. So I think let's come back to the picture. Let's come to the situation number two, where we're looking at a chain holding. So let's make one thing very clear. Don't worry, I'll document the notes very soon. So there are 2-3 focus points which I need to keep in mind as far as rule number 4A is concerned. When you look at the rule number 4A, what comes to the mind is, number one, it is something which is giving a choice to the company. It is not mandatory. So even if you meet the conditions of 4A, you got a choice. You want to consolidate, go ahead. You don't want to consolidate, don't consolidate, your choice. That is one. Second, the concept of para number 4A is applicable only if it is a chain holding. So it is going to be applicable only if it is a chain holding. It does not apply other than a chain holding. That is number two focus point. Don't worry, we'll document. And number three, the concept of para number 4A applies to the middle company in the chain. So you need to keep three things in mind. Number one, you need to keep your focus clear that para 4A is not mandatory but a matter of choice. Number two, the concept of para 4A applies only if there is a chain holding. And number three, the concept of para 4A applies only to the middle company where you're giving them a choice. Okay, let's now understand, quickly consolidate the four criterias which are given. Number one, the first condition is that B is a wholly owned subsidiary of A, done with the condition one. But if not, so if B is a partly owned subsidiary of A, inform the NCI and get an NOC from the NCI, then condition one is met. Condition number two, B is not listed. The debt equity securities are not listed. Number three, the debt equity securities are not even in the process of getting listed, neither listed nor in the process of getting listed. And number four, which has got two conditions. We can say the ultimate parent of B or the intermediate parent of B in this particular case is presenting consolidated financials as per Ind AS, and they are as for the public use. So he is presenting financial statements available for public use, one, and which is in accordance with Indian accounting standards, two. If all these are met, B gets a choice. I hope, friends, I am pretty much clear on the agenda so far. Okay, I think Viraj, you said, sir, exception is optional. Yes, exception is option and exemption is mandatory. Absolutely correct. Okay, so I think let's now document certain notes back to you. Having understood these part, let me now consolidate the learnings to you. So let me just take it forward. Okay, now you can start writing. I'm now going to give you a notes on the rule number 4A. Let's consolidate the picture. So we're looking at the concept of rule 4A, small a. So earlier we did was rule 4A, that was capital A, which was giving a clarifications, but this is not the rule 4A, I would call it as para number. I guess we should not write the rule. This is the para number 4A, small a, of Ind AS 110. So as I said, there are three focus points before you apply this para. So let's put across the three focus points. So it's going to be very easy for you to remember things as well. I've started with three clarifications. Then I'm giving you the rule, the para number 4A, which has got three focus points. Later towards the end, we're going to make some mind mapping as well. Now, what are the three focus points? What we need to keep in mind? Number one, it is optional. The first is that it is optional. That is, even if all four conditions are met, even if all four conditions are met, the entity may decide to consolidate. So it has got a complete choice. It is optional in nature. Now, there is one thing which you need to keep in mind. It is completely optional. Even if all four conditions are met, you must still decide to consolidate. That is one. Second, it applies only if it is a chain holding. So it applies only if it is a case of a chain holding. Let's underline chain holding. So the second prerequisite is there has to be a chain holding. And number three, the choice, underline the word choice, is available. The choice is available only to middle company. Underline the word only to middle company. So the choice is going to be available only to the middle company, underlying middle company. Now, middle company would mean any middle company in between. That is, if the chain is longer, A, B, C, D, we're looking at B and C, they're middle companies. Okay. Now, moving forward in terms of the para 4A, there are a total of four conditions. So if you want to get the choice, there are a total of four conditions which you need to apply. So the first one is, I'm taking the example to document this. A has got a control over B and B has got a control over C. So we'll take this example as a base to clarify the four conditions. Number one, B is a wholly owned subsidiary. B is a wholly owned subsidiary. B is a wholly owned subsidiary of A. Underline the word wholly owned subsidiary of A. Or, let's put it like this, or B is a partly owned subsidiary of A. Underline partly owned subsidiary. So B is a partly owned subsidiary of A. So B is a partly owned subsidiary of A. Brackets we can write down. We need to inform NCI and get NOC. So you need to inform the NCI and you need to get a no objection certificate. That is next. The condition number two, B is not a listed entity. Underline the word not. B is not a listed entity. And then condition number three, B is not, underline the word not, in the process of listing. B is not in the process of listing either. So it is neither listed nor in the process of listing. And the condition number four is any ultimate parent, in my example, it is A, or intermediate parent, any ultimate parent or any intermediate parent, A, presents consolidated financial statements for public use, underlined public use, and B, as per Ind AS. So there are two subconditions to be applied in this particular case. So the two subconditions to be applied is it is presenting consolidated financial statements, which is as per Ind AS for public use and as per Ind AS. The two focus points available for public use, one, and it is as per Ind AS. Right, friends. So I think that clarifies the agenda. I hope the concept of the para number 4A is absolutely clear. I guess you're very clear with the three focus points. That is, it is applicable for a chain holding, and it is something which gives a choice, and it is applicable to the middle company in the chain. And what are the four conditions? That you need to prove that B is wholly or partly owned. If it is partly owned, get an NOC. B is not listed, not in the process of listing. Ultimate or intermediate present parent is presenting consolidated financials. Number one, public use, and number two, as per Ind AS. Right, friends? I hope we are pretty much clear with this concept. Okay, I think Shruti, you've got a question. So why is it applicable to the middle company only, and in the first subsidiary, the shareholder objective, the company will prepare a console? Yes. If there is an objection with the NOC has got, then in this particular case, consolidation will become mandatory. And secondly, why is it applicable to the middle company? The logic is simple. You see, A in any case is going to consolidate B and C both. Because A in any case is not getting an exemption, so he is going to consolidate B and C both. Then are we not duplicating the efforts by telling B also to consolidate C? Now imagine that B is consolidating C, one, A is consolidating B and C, then it's a duplication of efforts. And I think the standard setters had one thing very clear in mind, that if B is not listed, nor in the process of listing, then I think the public stake is not there. Not many people are interested in his results. So that is one very important factor, that it's neither listed nor in the process of listing. So nobody is too interested in his results. That is one. Second, if A, the ultimate parent, is already presenting a consolidated financials, then I think you're asking B, why do you need to duplicate the efforts? A in any case is consolidating B and C, so let's not force B to consolidate as well. At the first instance, nobody has got a public stake in that company, and in the second instance, nobody has got an objection if B doesn't present a consolidation, and at the same time, duplication of efforts is taking place. So the standard setters well understood that no public stake, duplication of efforts, and at the same time, nobody's got an objection of not consolidating, then I think we're pretty safe, and we can tell them that, boss, if you don't want to consolidate, don't consolidate in this case, right? I guess you got your answer on that. Okay, I think Shruti, you said, sir, all exceptions need to be complied with. If one of these is missing, then it won't be an exception. Yes. You need to meet all the four conditions. I think that is good. Let me emphasize and overemphasize. You need to meet all four. You need to meet all the four conditions. If you fail any one, you are not given a choice. You need to meet all four. You get a choice. You fail any one, you don't get a choice. Correct. And Suraj, you said, so please stand a bit aside to see the board fully. Oh, I'm sorry. I'll just get a bit aside, so you can take a note, then I'll come further. So in the meantime, friends, give me your inputs. Is everybody absolutely clear with the para number 4, clause A? So tell me if you're absolutely clear with the agenda. This is one of the exceptions we have discussed. We'll be now coming to the other inputs as well. Let's see whether it is a case of exceptions or exemption. But rule 4A is a simple case of exception, giving a choice in a chain holding to the middle company. Okay, so I guess done so far. Now let me take it further. Yes, clear indeed. That is great. Okay. Now let's go to another interesting case. Now this might be slightly complicated, because this one was not difficult, but I think what I'm about to discuss can be slightly complicated. But trust me, you'll get a complete hang on in some time. So let me now take it further, and I'm coming to another interesting clause, and that is para number 4B. It's the capital B. So we've got para number 4B, that is capital 4B. Now watch this carefully. I'm going to read a few things to you. I'm going to first read a few things to you, then I'm going to create a simple three-step model on this because this can be slightly confusing. So I'm going to give you a three-step model very soon. But first, I'm going to read a few things. So don't get worried. Notes will come later. It says in terms of para number 4B, now we're looking at the second one, para 4B, a parent that is an investment entity. A parent that is an investment entity. Now, immediately a question comes. So what is an investment entity? For the time being, let's understand it in a simple manner. An investment entity is one which gets money from more than one investors and puts the money in a lot of other companies. So what do I do as an entity? I am basically taking a money from a lot of unrelated investors and I park that money in more than one investments. I'm basically acting as, you can say, an intermediary where I am helping companies to grow their funds. My idea is to earn a capital appreciations on the investments made. My idea is to get, you can say, a income from these investment. So what I do, I will tell a lot of unrelated investors, you give money to me and I'm going to make a lot of investments in other companies. And the idea is I want to basically get a capital appreciations because of these investments. The idea is that I want to get an income out of these investments. Something similar to what you've done in Ind AS 40 that is called investment property. So when you invest in a property, the idea is getting a capital appreciation and getting a rental income. Similarly, this investment entity is going to make investments on behalf of a lot of investors, and the objective is earning a capital gain. The objective is earning an income out of these investment. Now, this investment entity, since it is in the business of investing money on behalf of other investors, it may also get a control over other investees. You're taking money from the investors and you're putting that money in the other companies, then you might get a control over other investee companies as well. So in this particular case, you can say that control is something which is, not by choice. You wanted to get a capital appreciation, you wanted to get an income out of these investments, but you never wanted a control over the company. The intention was not to acquire a control. The intention was to get a capital appreciation and an income from the investment. So the standard setters thought that in such a case, an investment entity which is existing with the objective of getting a capital gains and investment income should be, given certain exemptions. You heard me correct. They decided to give certain exemptions, not exceptions. So it says a parent that is an investment entity shall not present. The word is shall not present. In the para number 4 clause A, it says a parent need not present. It was giving an option. But in terms of the para number 4B, we are saying it's mandated. Shall not means that we are giving them a mandate. We are saying that you cannot consolidate. Even if you want to consolidate, you cannot consolidate. I'm telling them you cannot. So this is a case of what we can say is an exemption. It is a case of what we can say is an exemption. You are mandating them. So it says a parent that is an investment entity shall not present consolidated financial statements if it is required in accordance with the para number 31 of this Ind AS to measure all the subsidiaries at a fair value through profit and loss FPTPL. Now we need to see something more. What is given in terms of para number 31. But at the very outset, let me tell you something. When you're looking in terms of the para number 4B, here we're looking at A has got a control over B. I'm looking at a situation where there is no chain. I'm looking at a situation where there is no chain. I am also looking at a situation where there is a chain. Now, please hear me very carefully because this could lead to confusion later. So when I'm looking at the para number 4B, it can apply to A in situation 1. This was situation 1. It can apply to A in situation 1. So even if there is no chain, then para number 4B can apply. In this particular case, that is situation number 2. Let me clarify. It can apply to A. It can also apply to B. It can apply to A and it can also apply to B. Sir, can you clarify once again? Now, let me make it very clear. You've got para number 4A. Get this very clear so that there is no confusion later. And there is para number 4B. Let's give you a clarification and please keep this in mind. Because I will later, after explaining the para number 4B, merge the two concepts and do some permutation combinations with you. Then we'll do certain illustrations which are given in the study material to make it very clear. Now let's get one thing very clear. Para number 4A is giving you a choice. It is optional. That is one. Para number 4B is supposed to be mandatory. Para number 4B is supposed to be mandatory. So let's not put the brackets. I think let's put it as 4B directly, no brackets. So this is one thing which you need to keep in mind, that para number 4A is optional and para 4B is mandatory. Now, if you look at a situation number 1 where you say that A is got a control over B, so this para cannot apply in situation 1. There has to be a chain holding for para number 4 clause A to apply. In this particular case, if you're looking at situation 1, A's got a control over B. Can this para apply to A? Yes. So in this case, situation 1 cannot be covered in 4A. But in this case, situation 1 is covered under 4B. So A can get a mandate not to consolidate under this. Next. We're looking at situation number 2. A's got a control over B and B is got a control over C. This situation can apply in terms of 4A, but it can apply only to B. It can apply only to the middle company. So para number 4A does not address situation 1, it addresses situation 2, and that also for the middle company, and it gives them a choice. Now, if you look at the para number 4B, it is applicable to situation 1 to A. And let's also have a look at situation number 2. Situation number 2, we can say A's got a control over B, B's got a control over C. And in this particular case, does situation 2 apply to para number 4B? Yes, it can apply to A. It can also apply to B. Sir, which means that company B can avail for A and company B can avail for B, but he can avail for B only if it is an investment entity. Let's get this very clear that this concept is applicable only if company A or the company B to avail this para, it should be an investment entity. Otherwise, it cannot avail para number 4B. Let's get this very clear. So you need to be very clear in terms of 4A and in terms of 4B, because there is a very interesting illustration in the study mat, which is also there in the education material. And you need to understand the concept that when 4B could trigger to D company and when 4A could trigger to B company. So let me consolidate the picture. Please hear me very carefully. Number 1, the para number 4A is completely optional 1. It's not applicable if there is no chain. It is applicable only in a chain to the middle company. That is very clear with us that it does not apply in situation 1. It applies when there is a chain holding, and it applies only to the middle company where he can get the advantage of 4A. Now let's come to the 4B. 4B triggers in both situations when there is no chain and there is a chain. So it can be availed by company A if it is an investment company. It can be availed in the chain by A if it is an investment company. It can be availed by company B if it is an investment company. So let us also tell us one more thing. You tell us that if company B gets a choice under 4A and it is mandated under 4B, so whom is he supposed to listen to? Well, I think if company B is getting a choice under 4A and mandate under 4B, it has to listen to 4B. Then in that particular case, it cannot consolidate under 4B. Right? So for company B, if he's availing the choice here and is also getting an exemption here, he has to listen to the exemption and he cannot consolidate. I hope, friends, I'm very clear with the picture in terms of 4A as well as 4B. Right? This is something which one needs to be very, very clear indeed on this. Okay. Now we've understood slightly that what is an investment entity. You are supposed to be a company where a lot of investors are giving money to you, one, and you're putting that money in a lot of other companies as well with the idea of getting a capital gains, appreciations from the investment and getting an income from the investment. So the moment you're an investment entity, in this case, you could get the exemptions under para number 4B. Now, let's take it a little further. I'm now going to take you to the para number, which is exceptions given in terms of the para. Now, let's go to the para number 31, 32, and 33. So I'm just going to read this and then I'm going to give you a three-step model on the concept of para 4B. So let's first have a look at the concept which is given in para 4B. Let's read. So we read the para number 4B. The explanation of 4B is given in para 31, 32, 33. It says investment entity exceptions to consolidation, but this exception is an exemption. This exception is an exemption. We're telling you cannot consolidate. Except as given in para 32, an investment entity shall not consolidate the subsidiary or apply Ind AS 103 when it obtains a control of another entity. Instead, an investment entity shall measure an investment in a subsidiary at a fair value through P&L in accordance with Ind AS 109. If I look at situation one only, if I look at situation number one only, A has got a control over B, and I said A is an investment entity. I'm looking at situation one. A is an investment entity and he's got a control over B. I will tell A, you cannot consolidate. You will reflect this investment in your balance sheet at FVTPL, a fair value through profit and loss as per 109. You're going to apply the financial instrument standard. Now, let me clarify something, friends, which I will clarify later when I come to the financial instrument standard, but let me make it very clear. If you've got investments in equity instruments of another company, if you've got investments, please hear this very carefully. If you've got investments in equity instruments of another company, it can become a case that it is a related party, or it can become a case that it is unrelated party. So when you invest into the equity instruments of another company, it may result in a related party. A related party means control, joint control, and a significant influence. So you've got a control or a joint control or a significant influence. The company becomes a related party. And if it is neither a control, nor a joint control, nor a significant influence, you become a passive investor. You become a passive investor. So we can say that if A gets a control over B, or A gets a joint control over B, or A gets a significant influence over B, it is a related party. B is a related party. In this particular case, Ind AS 109 on financial instruments not applicable. Ind AS 109 on financial instruments is not applicable. But if it is an unrelated party, then Ind AS 109 is applicable. If somebody were to ask me in terms of MCQ, and he asks me my conceptual knowledge, and he says that if A is got a related party equity investments, does 109 apply? No. Is there any exception? Is there any exception where you get a control and still Ind AS 109 applies? Yes, there is an exception. An investment entity shall measure the investment in a subsidiary at FPTPL in accordance with Ind AS 109. So if A is an investment entity, then Ind AS 109 becomes applicable. Wow. So, sometimes people say MCQs would mean passing easy. Yes, it is. But you need to get your conceptual clarity as well. So it is very important that the nitty-gritties are very clear to you. So let me now put it once again. If I say that A is got equity investments in B, I would say, boss, is A got a control or a joint control or a significant influence over B, then it is a related party investments. Please don't apply 109. So if it is unrelated party or passive investor, A would apply 109. Then I'll say, okay, is there any exceptions? When A makes a related party investment and still Ind AS 109 becomes applicable, I would say if A is an investment entity, then in that particular case, it is required to follow Ind AS 109. All these investments will be reflected in its balance sheet at a fair value through a profit and loss. Okay, let's take it further. I know this might be sounding a bit technical indeed, but don't worry. As we consolidate the picture, you'll become crystal clear with things. Okay, now let's read further. So it says there was an exception in para 32. Now it's talking of an exception, notwithstanding what is given in 31. Now see, if an investment entity has a subsidiary that is not itself an investment entity, and so there are two conditions. It says investment entity has a subsidiary which is not an investment entity and whose main purpose and activities are providing services that relates to the investment entity. It shall consolidate that subsidiary in accordance with this standard. There is an exception where A will be required to consolidate even if it is an investment entity. See what the exception is. If an investment entity has a subsidiary which is not an investment entity, one, and the main purpose activities are which relates to the investment entity's activity, it will consolidate. I'll now explain. I'll put it in a simple three-step model so that you're very clear with the picture. Now watch this very carefully. Watch this carefully. You've got A, you've got B. So in the step number one, please watch the steps carefully because this will help you the interpretation of para number 32. Now, I'm not looking at a chain right now. I'm looking at a non-chain holding. The step number one you're going to put across to your question is A an investment entity? The first step you're going to ask yourself is A an investment entity? If you say no, A does not get any exemptions or exceptions. Mind the word carefully. I'll document that later. So if you say A is not an investment entity, it doesn't get any exemptions or exception, because if it is not an investment entity, 4B cannot apply. If it is not an investment entity, then in that particular case, being a top company, it cannot get 4A. So if it is not an investment entity, if you say no, it is not an investment entity, it has to make consolidated financials. So the moment you say that A is not an investment entity, tell him, boss, you cannot get exemptions, you cannot get exceptions, you have to consolidate. If it says yes, I'm an investment entity, you go to the step number two. So in this particular case, the moment A is an investment entity, you go to step number two. Now, apparently you will say, okay, you're an investment entity, don't consolidate. No. You cannot stop at this stage if it is an investment entity and say that you're getting a exemption. You go to the step number 2 now. You go to the step number 2 and say that is B an investment entity or not. Pehle parent company is an investment entity or not, and then subsidiary company is an investment entity or not. So you need to first of all see, is the papa investment entity, and then you need to see beta is an investment entity. It reminds me a very interesting dialogue as well. बेटे से क्या पूछता है, बाप से पूछ. So in this particular case, you need to first ask the father, and then you need to ask the son as well. So you need to first of all ask that is A an investment entity? If I say yes, I go to step 2. And then in terms of step number 2, you say that is B also an investment entity? So you may say a yes or no in this case. So now see what the para number 32 is saying, that it says if an investment entity is a subsidiary which is not an investment entity. So which means if you say yes, it is an investment entity, then consolidated financials not required. Then consolidated financials not required. He gets an exemption. So A is investment, B is investment, then consolidation exemption applicable. If you say that B is not an investment entity, go to step number 3. Go to step number 3, go step by step. So the position is simple. Is the parent A investment entity? No. Consolidate. Yes, go to step B. Is B an investment entity? Yes, you got an exemption. If B is not an investment entity, you go to the step number 3. Now, in terms of the step number 3, you need to see what does B do. What is the main purpose and activities of B? See what it says. The subsidiary is not an investment entity, and main purpose activities of providing services that relates to the investment entity's activity. Now let me ask in the third step, what does B do? Is the activities of B similar to the activities of A? Is the activities of B similar to A? B is not an investment entity because there are stringent parameters to meet before you call it as an investment entity. So it is quite possible that B is doing a lot of things similar to A, but still he could not qualify to be an investment entity. Because if you look at the parameters of being an investment entity, there are a total of almost 7 conditions, 7 parameters, with the help of which you would say that you become an investment entity. There are certain definition parameters, there are certain characteristics as well. The list is long, I'm not getting into the list. So there is a huge possibility that B does something which is similar to A, but still he does not qualify to be an investment entity. So in this particular case, we will say, okay, is the activities of B similar to A? If you say yes, or if you say a no. If you say that the activities are similar, yes, they are similar, you need to consolidate. If it is not similar, you don't need to consolidate. So once again, can you consolidate the picture? Let's put it again. If you're looking at the para number 4B, you need to consider the exceptions of 4B as well. Para number 4B on a very apparent level says that if A is the investment entity, no consolidation. But the para number 32 gives you exceptions to para number 4B, where in spite of the fact consolidation might be done. So your focus in step 1 is the parent is an investment entity. Yes. The focus in step number 2 is the subsidiary is investment entity. Yes. No consolidation. But if you say that parent is investment and the subsidiary is not investment, then you need to see, does B does similar work to A? The activities and purpose of B is similar to A. If yes, consolidate. And if they're not similar, then don't consolidate. The reason is that if B is not an investment entity, but it is doing something similar to A, it is like consolidating apples. And if you say that B is doing something which is dissimilar to A, then you can't consolidate apples and oranges. So the standard setters were very clear. Consolidation can be done only in a situation where A and B are doing similar businesses. Even though B, which is supposed to be not an investment entity, but is doing something similar to A, then let's consolidate A and B. So this was the input in terms of para number 32, exception. Then there is a little last input as well before we document these things. So now there is another para number 33, and let me just read the inputs in this case. Then we need to consolidate everything in terms of this. No worry, we will consolidate that as well. It says a parent of an investment entity, a parent of an investment entity. Now he's referring to a chain. Earlier we were not talking of a chain. Now let's have a look at the chain. Let's say A, and then there is B, and then there is C. B is the investment entity. Now let's keep this diagram into account. A parent of an investment entity, I'm looking at A, the parent of investment entity, shall consolidate all entity that it controls, including those controlled through an investment subsidiary. So A will be consolidating B and C both. Unless the parent itself is an investment entity, unless A is an investment entity, the positions are different. But they're very clearly saying that if A is supposed to be a parent of an investment entity, but he's not an investment entity in himself, A will have to consolidate everything. Because if A is not an investment entity, he cannot avail for B. And if A is looking at para number 4A, he cannot get the para 4A because he is on the top of the pyramid. A chain holding can be availed only by the middle company. So this is getting heavier. Can you please quickly consolidate before you give us a break? Yes, I will first consolidate the picture to you, and then we'll take a break, because after that, I'm going to create some sequences, do a little practice questions with you. So first, I think let's put that consolidations to you. And Shruti, you said, sir, in for A, company B is only an investment entity, then B can avail for A for B. I'll just clarify, no issues. Just now watch this carefully. I'm now going to first consolidate the picture to you. Just watch this carefully, and you'll get the entire inputs. And before documenting the three-step model, I just want to first of all put something. Let's first document the three-step model, then I'll consolidate the picture. So let's first of all consolidate the three-step model. Let's consolidate the three-step model. This three-step model is based on the para number 4B, read with the para number 31 to para number 33. So this is the inputs which I'm creating, the para number 4B. So the first focus point is, when you're looking at the para number 4B, it is mandatory. It is mandatory. And if you're looking at para number 31 to 33, it is giving you an exception to para 4B. It is giving the exception to para number 4B. So it gives you an exception. So let me consolidate this in terms of a simple three-step model. Now, just keep this diagram into account. A has got a control over B. So I'm going to take this as a base. Let's begin with the step number 1. So the first thing we're going to do is step number 1. And that is A, the focus in my example A, an investment entity? So the first question is, you're going to ask a question. I'm not considering chain. So there is no chain as of now. I'm not considering any chain holding as of now. We're considering no chain. We'll insert the chain later. So is A an investment entity? So the answer is either a yes or the answer is a no. Well, if A is not an investment entity, this para cannot apply. So he has to consolidate financial statements, definitely required. He cannot get any exemptions. He has to consolidate because it is not an investment entity. If you say yes, please go to step number 2. So the first focus is to see A and B. Ask yourself the question, is A investment entity? And then we go to the step number 2. Then we go to the step number 2, and in terms of the step number 2, we say, is B, in my example, the subsidiary, is B an investment entity? So put across a question, is B an investment entity or not? So the answer could be a yes, or the answer could be a no. Well, if the answer is a yes, no consolidation required for A. A is investment, B is investment, no consolidation. So consolidated financial statements not required, exempt. Here there is no exemption. Here you get an exemption. If the answer is a no, you go to step number 3, step by step. No hurry. You got to go on a step by step in this case. And then the focus in terms of the step number 3 is, the focus in terms of step number 3 is, you need to see that the activities of B is similar to the activities of A or not. So we need to see that the activities of B, the activities of company B is similar. Is the activities of company C, is B similar to A or not? So is B doing something which is similar to A? And here again, we get the answer yes or no. So we get the answer yes, it is similar. Apples, apples. Consolidated financials required. No consolidated financials exempted. So this is the crux in terms of the para number 4B, where you need to see these situations. A investment, B investment, no consolidation. A investment, B not consolidation. Doing a similar work or not? If yes, consolidation. If no, no consolidation. Okay, now based on this, I think I just need to consolidate the picture a little further. I'm just going to consolidate the learnings in terms of for A as well as for B, and then we merge things later. But first, let's have a quick look at this. I hope, friends, I'm very clear now on the entire picture. Okay, Shruti, you got a question? So, in other words, B is doing similar business to A, and B not being recognized as investment entity, it is being punished in terms of consolidated financials. Please prepare, please correct me if I'm wrong. Well, it's not a matter of punishment. I'll tell you something. Let's make the logic clear. A is an investment entity and B is an investment entity. Now let's get one thing very clear. If A is an investment entity, it does not intend to get a control over other companies. It is, you can say, a control by default. Let me put it very clear. You know, if a company is an investment entity and the objective is capital appreciation, earning investment income, it's a control by default. So in this particular case, since the objective, the existence of the company is with a certain objective, you can't tell them to consolidate. So on a very basic front, we said that if A is supposed to be an investment entity, you know, he's getting a control by default, so consolidation doesn't make sense. But now imagine if B is also an investment entity, then B is only doing extended work of A. And if B is doing extended work of A, then it is also got, you know, it is also doing the same kind of work itself. A is the investment, B is the investment. So he's opening up a subsidiary which is merely carrying out its own objective. So let the exemption continue. So the moment A and B are investment entity, they've got a control, you can say, by default. So let's not consolidate. Now, due to any reasons whatsoever, B is not an investment entity, then I would say it's a normal company. Then why does, you know, A is getting a control of a company which is not an investment entity? Now, B is doing something different. If B is doing something different in life, that means A is trying to enlarge the portfolio by default. You know, get my picture very clear. If B is not an investment entity, A is getting a control over that company, and he's getting a control of the company again by default by diversifying the portfolio in which he wants to invest. So even if B is not an investment entity, he's doing something different in nature, it's a control by default, and let's not consolidate. But imagine that B is, as I said, why we are consolidating this case. B is doing a lot of things similar to A. But he failed to meet the definition of investment entity because the definition of investment entity has got a total of 7 parameters to meet. So I'm looking at the possibility that, if B does not meet the definition of investment entity, but he's doing something similar which A does, then I think it seems to be that it's not a control by default. That's what my understanding is. And in this particular case, we're telling him to consolidate. So because we're looking at the position that why B did not, meet the parameters of being an investment entity. So in a way, we are saying that if it fails the parameters of being investment entity, but at the same time does something similar to A, then it's a control by intention, indirectly. Right? I hope that position gets clarified. The chain is clear. Okay, so now, let me just do a little quick consolidation, or I think we'll just do a very quick consolidation, but I think we'll first give you a break and then consolidate the picture and do some working. So first, let's, I think, get one simple picture clear. When you're looking at the aspect of para number 4, clause A, small a, remember what should be deep in your mind is chain. And we're looking at exemptions. We're looking at, a choice given to the middle company. So para 4A immediately throws a light that it is a choice, and it throws a light there is a chain holding, and it throws a light middle company is the focus. The para 4A does not require the middle company to be an investment entity. You're giving a choice to the middle company. The choice is there, the middle company in a chain holding. And when you're looking at the para number 4, B, the capital B, your focus is, the top company. But apart from the top company, even the middle company could get the exemptions under 4B. So you're focusing on a 3-step model. So in a case where you apply 4B, apply the 3-step model. Just look at the fact that you could get, this avail for A, you could get this avail for B by applying a 3-step model. Now what I'm going to do, after the break, we'll do some permutations, combinations with you, give you a clarity. So that once we do a little practice questions with you, you are absolutely clear with the agenda. Okay. So I guess, friends, now let's give you a break. I think the time is almost around 8:46, so 10, 12 minutes of break. Then I join you back with the consolidations of learnings and the practice as well. Enjoy your break. Welcome back, friends. So I hope you relax your mind. And I think first let's consolidate the learnings, what we have done on para number 4A and 4B, so that I can take various permutation combinations which can arise and you get a clarity at the highest level on this. So let me, I think, begin the journey. And okay, I think no questions so far. Let's, I think, consolidate the picture. Now, watch this carefully. Because based on the four conditions, what we have done, and based on the parameters, what we have done in terms of the three-step model for the para number 4B, let's, I think, consolidate the entire input. So let me just remind you one basic input, as I said earlier, the difference between the para number 4A and 4B, that 4A is giving an option and 4B is making it mandate. The para number 4A is supposed to be applicable for a chain holding, and the para number 4B is going to be applicable whether there is a chain holding or not. But what is important is the three-step model in that case. Now, let's create some permutation combinations to begin with. So I'm going to create all the kinds of permutation combinations, and we need to watch this very carefully. So I'm going to create now situations. I'm taking, first of all, rather, let's take the case 1 and sub situations. So let's take a case number 1. Watch this carefully. The next 5-10 minutes is going to be very crucial. If you're able to understand this, trust me, the entire chain of thought is going to be very, very clear. So looking at case 1 where there is no chain holding. I'm looking at the case number 1 where there is no chain holding. So first we're going to do case 1, no chain holding, and then we're going to go to the case number 2 where there is a chain holding, see which para is going to be applicable. So make a walkthrough very carefully. Let's take a situation number 1. Let's say company A has got a control over company B. Let's say company A has got a control over company B. Now I'm looking at various situations in this case. I think let's keep this as a base and let's create a situation number 1. Let's say company A is not an investment entity. Please watch this very carefully. Every word is going to be very important based on what we've learned so far. Now, this is a case where there is no chain holding, and what should immediately come to the mind that if there is no chain holding, that in that particular case, the para number 4A is not applicable for sure. In this particular case, A can never ever appear the concept of para number 4A. That is very clear. Because there is no chain holding, I've written that. Next. In this particular case, since it is not an investment entity, then para number 4B is again not applicable. So you need to get this very clear that if you're looking at a situation where there is no chain, 4A cannot apply. And if you look in a case where A is not an investment entity, 4B cannot apply. So the conclusion is that A is mandated. The conclusion is that A is mandated to present consolidate financial statements, simple and straight. He is completely mandated. So in this given situation, no exception, no exemption, A is required to consolidate. Get the focus very clear. No chain holding means para 4A not applicable. Not an investment entity, para 4B not applicable. Great. Now let's go to the next situation. So let's take a situation number 2. Let's take a situation number 2. A is an investment entity. A is an investment entity. Now, let's watch this again carefully. So when you say that there is no chain, I can definitely say that the status of para number 4A is the same. No chain holding, so para number 4A cannot be applicable. Now, in this case, A is an investment entity, so I need to check my three-step model. I need to check my three-step model before I decide anything. So in this particular case, only because A is an investment entity, I need to apply a three-step model. So what do I do now in this particular case? I would say, let's say A is not and B is not an investment entity. Let's say B is an investment entity. And coupled with this, let's say the activities of B is same as A, or the activities of B is not same as A. I'm treating all permutation combinations. Watch it. So everything is dependent upon a three-step model. Then what is the status of the three-step model? Accordingly, I will decide. Now I said A is an investment entity. I go to the step number B. B is not an investment entity. So if I say, sorry, I think I should have written B is an investment. So in this case, B is not investment, and here B is. Let's rectify that. So I'm looking at A is an investment. I go to the step number 2, B is an investment, so A gets an exemption. So in this particular case, A is mandated not to present. A is mandated not to present CFS. A is mandated not to present consolidated financial. Because out of my three-step model, A is investment, B is investment, that's it. Therefore, A will be told you cannot consolidate. Let's go to the next one. Let's go to the next one in this case. So in all these cases, the three-step model would apply. In all these cases, three-step would apply, and the para number 4A, of course, is not applicable in all the permutation combination. Now, in this case, I said A is an investment entity. I went to the step number 2. I said B is not an investment entity, but B is doing something similar to A. So since B is doing something similar to A, the activities are similar, then A will have to consolidate. So we can say A is mandated to present. A is mandated to present consolidated financial statements. So in this particular case, A is mandated to present consol. Then I go to the last one. I said, okay, A is not an investment entity. We go to step 2. B is not an investment entity. We go to the step number 3. B's activities are not same to A. So in this case, A is mandated not to present. A is mandated not to present consol. I hope the words are very clear and the concept is 100% clear. There cannot be any other permutation combination in case 1 if there is no chain. So I've taken the case 1 where there is no chain holding. When there is no chain holding, this is one thing you need to keep in mind, that para 4A cannot be applicable the moment there is no chain. And the status of para number 4B is completely dependent upon whether A is an investment entity. If not, para 4B cannot apply. If yes, please apply a three-step model and reach a conclusion. I guess, friends, before we go further, I want you to scale yourself on a scale of 10 only on this case. Give me what is your comfort zone on a scale of 1 to 10 regarding this concept. I've taken all permutations, combinations when there is no chain holding. Then I'll go to the case number 2, that if there is a chain holding, then what is the status? And of course, I hope you remember that the conditions which are there in para 4A, there are 4 conditions, and in terms of 4B, it's a 3-step model. So let's get your comfort zones and then take the journey forward. Okay, Shruti said 7. 7 on this, I think, is slightly less considering the level of complexities which are there in terms of chain holding. I think it should be at least 8 and above. So I think because I've taken all the permutation combination, get this very clear in your mind. You need to be very clear in your focus. When there is no chain, 4A doesn't become applicable. One thing which should be at the mind. When there is a case where A is not investment entity, 4B not applicable. The moment it becomes an investment entity, your 3-step model comes into play. and there are only three permutation combinations. A is investment, B is investment, A is told not to consolidate. A is investment, B is not investment and does something which is similar, he is required to consolidate. A is investment, B is not investment, and the activities are not similar, A is told not to consolidate. Okay, so we got the inputs 8, 7, 8. That's okay. I think you need to definitely revise, friends. To me, on this, it should be at least 8 and above. 7 is okay, but you need to revise further. Now let's go take it further. I'm now coming to the case number 2. We're coming to the case number 2. Now, in terms of the case number 2, I'm considering a chain. So please watch me carefully. But trust me, once we're done with the practice questions, illustrations in the study mat, you'll definitely get a confidence. So I'm now looking at a situation, chain holding is present. Now I'm looking at a situation where the chain holding is present. Let's take some permutation combinations in this case. Now I'm going to take some various permutation combinations in a chain holding. Watch this very, very carefully. All kinds of permutation combination. A has got a control over B and B has got a control over C. So this is the chain. A controls B and B controls C. Now in this particular case, I will look at the status of A and I will look at the status of B separately. So I'm going to look at the status of A and I'm going to look at the status of B separately. Please hear every word carefully. Now, when I'm looking at the concept of A, in this case, there is a chain holding, but still para number 4A is not applicable as far as A is concerned because he's on the top of the pyramid. The para number 4A is not applicable because we can say he's a top company. And the para number 4A does not become applicable to the top company. So one thing is very straight. Then when you're looking at the chain and you're looking at the para number 4A, it can never be applicable to the company which is on the top of the chain. One. Now comes the question, what about the status in terms of para number 4B? Can I say this depends upon the three-step model? This depends upon the three-step model. So can I say same as situation number 2 of case number 1? It is same as the situation number 2 of case number 1. We need to see that A is an investment entity and what is the status of B. So here I am simply putting it, it is same as situation number 2 in terms of the case number 1, what we've already discussed. Everything depends upon a three-step model in this case. Now let's go further. Now this is the tricky one and we need to hear this very, very carefully. Now we're looking at B. Is para number 4A applicable to B or not? Yes, it can apply. So we can say it can apply to B company because it is middle company. There is a chain 1, there is a middle company 2, and you need to look at the 4 conditions. So in this case, it can apply because it is a middle company. So if the 4 conditions are met, the answer is yes. So what do you need to do? You need to now evaluate the 4 conditions. You need to evaluate the 4 conditions in this particular case. So you need to evaluate the 4 conditions, and if the 4 conditions all are met, and if all the 4 conditions are met or any one fails. So get the position very clear, all conditions are met or any one fails. If all the 4 conditions are met, B gets a choice. We can say B gets a choice. He wants to consolidate, he can. He doesn't want to consolidate, he may not. Your mind should be very clear on which paras to which company. The middle company takes an evaluation of the 4 conditions, and if he meets all the 4 conditions, you get a choice. If anyone fails, then B does not get a choice. He does not get a choice. He has to consolidate. He has to consolidate in this case. This is one. Now let's have a look in terms of the next evaluation. Now we are looking in terms of the para number 4B. We're looking in terms of the para 4B. Can I say, though it is a middle company, I would apply a three-step model. I would apply a three-step model, and trust me, it is going to give me the same results what we did in situation 2, case 1. Depending upon the status of B and C. Here the status was dependent upon A and B. Here the status is B and C. The three-step model is going to be the deciding factor. I hope, friends, I am absolutely crystal clear on the case number 2 as well. Give me your inputs on a scale of 10 on this. For A, the para 4A can never ever be applicable because he's on the top of the pyramid. Then for B could apply only depending upon the three-step model. But in this particular case, B could be in a position to look at for A depending upon the 4 conditions, and also for B, if it is an investment entity, accordingly, we apply the picture. And one thing which I would like to clarify in this case, that para 4B prevails upon the para number 4A. The para number 4B is going to prevail upon the para number A. So whatever decision comes from para number 4B is going to be overruling, is going to override the impact in terms of 4A, because this gives a choice and this gives a mandate. So the para which gives a mandate is the deciding factor. Okay, so far so good. So I think we got the clear. Priti tells me crystal clear. 9 is the score. 8 is the score. That's wonderful indeed. So I think this time we got some better scores indeed. I think now we're in a good position to do some practical questions with you. But I think before we go forward, let's get one thing very clear. When you look at the status of para number 4A, your focus is very important that para 4A is chain holding, middle company, 4 conditions. Tuck, tuck, tuck. Your mind should work like a robotic. That when you look at a para 4A, your mind it is a choice, it is a chain holding, and works for a middle company only. Only works for a middle company, gives them a choice, and the presence of a chain holding is necessary. And when your mind comes on 4B, it's applicable irrespective it's chain or no chain. It is mandatory in nature, and everything works on a 3-step model. Your 3 focus points need to be very clear. Chain only, chain or no chain, optional, mandatory, and in this particular case, you can say 4 conditions, and in this case, 3-step model. That's how your mind should work sharp. I guess now we're ready to do some questions. Okay, Shruti tells me, sir, in case of company B, 4B will apply on B and C. Not C, beta. It applies only to the company which is required to consolidate. In this particular case, C is the bottom company. It is nowhere required to consolidate. So you just need to see that, B is consolidating C or not. C would not apply this para. The concept of para number 4A or 4B applies only to a company which is a parent as well. C is not a parent in the example. C is just a subsidiary, right? And he said, in which case para 4A and 4B will be applicable. Okay, I think let me do one thing. Let me just consolidate the picture once again. The final verdict to make it very clear. You see, you need to be clear that when I'm looking at para number 4 clause A, when I'm looking at the para number 4B, you need to get one thing very clear. Please hear this very carefully. Focus points. So I'm getting one thing very clear. There are a total of 3 important focus points. 1. In this case, the presence of chain holding is important. In this case, chain or no chain doesn't make a difference. In this case, it doesn't make a difference whether there is a chain holding or not. That is one parameter which you need to keep in mind. Okay, next. When I say chain holding, I'm looking at A in B and B in C. So this para will be applicable only to B, not to A, not to C. C is not a parent and A is the top company. So the focus is only on B. In this case, if there is no chain, in this case, the focus is looking at the para for B for A only. C is a subsidiary, not parent. And if you say there is a chain holding, if you're saying there is a chain holding, you're looking at this para for A, and you could also look at this para for B as well, not for C. I hope I'm very clear with my things. So in this case, the focus is only B can avail it. And in this case, A can avail it, or A or B can avail it. C doesn't come into the picture in either case because it's not a parent. That is focus point one. Second focus point. The second focus point is the para 4A is giving you a choice. It's an option. It gives you a choice. It gives you an option, even if there are things. And in this case, it is mandatory. In this case, it is mandatory. That is second focus point. And the third and the most important focus point is here you need to evaluate the four conditions. And here you need to evaluate the three-step model. I don't think so I can make it more clear. This is super mind map. This is my super mind map which I'm working on. Can't be better than this. So I think now if you look at this chart, you should be 100% clear. The presence of a chain holding is important and it applies to middle company only with the concept of four conditions to be evaluated where you get a choice. Here, whether chain is there or not, the top companies can get, the avail, the middle company can get the avail. It's mandatory. Your three-step model decides. A applies a three-step model, A and B apply a three-step model, being an investment entity or not. So the focus here is chain. The focus here is investment entity. So the focus here is the chain. The focus here is the investment entity, the three-step model. Now, I think clear. Thank you so much. That's wonderful indeed. I guess everybody is now pretty clear. So as we now solve the questions with you, your mind is going to be very clear because I'm now going to ask you questions. And we're going to go from simple to complicated questions on this area, which are given in the study material. Right, friends? And Suraj, you said, sir, A will consolidate both B and C. Yes, if A is required to consolidate, doesn't get exemptions or anything, A will be consolidating all the subsidiaries in the chain B and C all. Okay. Thanks for clearing the concepts. Thanks, Viraj. Wonderful. I think everybody is now pretty comfortable indeed. I've consolidated from all the corners left and right. Now let's, I think, begin the journey of practice with you. So do friends, please revise all this because this will give you confidence. Once you revise, you'll get the entire picture very clear. Okay, let me now take you to the study material. So I've taken a few questions from the study material. So let me now take you to a few questions out here. Now watch this carefully. This is illustration number 1 in the study material. And I'm going to read the question to you. And we're going to analyze with your help. I hope it is good enough to watch. I don't think so I need to zoom further. I think it's going good. Now, as I read the question, I'm going to ask you a few things. Wait for your answer. You need to be very clear where para 4A or 4B applies. We're looking at the scenario number A. Following is the structure of a group headed by company X. You can see there is a chain. You can clearly see there is a chain. The company X is on the top of the pyramid. There is a chain. Can it use para 4A? Quickly give me your answer, yes or no. Can it get the advantage of para number 4A? So when I'm looking in terms of the top company on the chain, can it get para number 4A? Quickly give me the answers. Will it be in a position to avail the concept of para number 4A? There is a chain and he's on the top of the chain. Okay, I think the internet seems to be slow. We want fast answers, friends. If you can give me There is a chain holding and he's on the top of the chain holding. Can he avail para number 4A? The answer is a big no. The answer is a big no, because nobody on the top of the pyramid in the chain can avail this para. Okay, can he avail the concept of para number 4B? It all depends whether he is an investment entity or not. It all depends upon whether he is an investment entity or not. Okay, we got the answers. Great. Wonderful indeed. And I think, Viraj, you said yes. No, 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 no. Remember, in a chain holding, it's only the middle company which can get the choice, not the top one. Now let's go to the company A, which is a middle company in the chain. There is a chain, it's a middle company. Can he get the advantage of para 4A? Yes. It depends upon the 4 conditions. Yes. So if he's able to fulfill the 4 conditions, yes. Okay, then let's look at the status in terms of the para number 4B. Would he be able to get advantage of 4B? If it is an investment entity, then maybe yes. So if he's an investment entity, then maybe he can get the advantage depending upon the 3-step model. I hope this picture is very clear. Your mind has to be very sharp in terms of that this is top of the chain, 4A not applicable, middle company applicable. 4B is completely dependent upon the status of being an investment entity. Okay. So A's got 100% stake in B and A's also got 100% stake in C. Let's read the scenario A. Now it says company X is a listed entity in India and prepares consolidated financial statements as per the requirements of Ind AS. It says company X, which is on the top of the pyramid, is preparing consolidated financial statements as per Ind AS. It's a listed company, so it is providing things for public use. A is an unlisted entity, not in the process of listing any of the instruments in public market. And company X does not object to A not preparing consolidated financials. Where the company A is required to prepare consolidated financials as per the requirements of Ind AS, the focus is on company A, that is the middle company. So now we know that in terms of the middle company, you could evaluate things under 4A and you could evaluate things under 4B. I am nowhere given the status that A is an investment entity or not. Since I'm not given any status in the question that whether A is an investment entity or not, I cannot evaluate 4B. I cannot apply a 3-step model. So my entire analysis is going to be based on the para number 4A, and we need to evaluate the 4 conditions. Let's evaluate the 4 conditions in this case. Number 1, is A a wholly owned subsidiary of X? Yes. We can say that A is 100% wholly owned subsidiary of X. The condition 1 is met. So do we need an NOC? No. Because A is a wholly owned subsidiary of X, no NOC required. Number 2, A is unlisted. He's very clearly given that A is unlisted company. So the condition number 2 is met. Then I'm also given clearly that A is not in the process of listing. It is not even in the process of getting listed. So the condition number 3 is also met. And then we go on to the condition number 4. Is the ultimate parent, that is X, preparing console as per Ind AS for public use? Yes. The company X is presenting a consolidated financials as per Ind AS 1 and for public use another. It's a listed company, so its consolidated financials are for public use and it is in accordance with Ind AS. So therefore, all the 4 conditions are met. Where the company A is required to consolidate, we can say A gets a choice. We can say A gets a choice in this case. I hope friends, now looking at the illustration, your confidence should be boosting more. You should be getting more confidence in terms of things. Are you? Okay, so that's great. I think we got the answer, Manisha. Para 4A fulfills exceptions met choice to consolidate financials. Wonderful indeed. Okay, let's go to the scenario number B now. So this is the separate scenario. This is the parameter. We're looking at the scenario number B. Now, there is one thing which I did not pinpoint earlier, which I'm now going to pinpoint. Because there is something which I did not pinpoint earlier in the condition. I'm going to pinpoint now once we go to the scenario. Assume the same facts in scenario A, except company X is a foreign entity. Company X is a foreign entity and it is listed in a stock exchange of a foreign country and prepares the financial statements as per the generally accepted accounting principle applicable to that country. I guess the moment I change the status of the top company, the ultimate parent, as a foreign company, which is doing a consolidation not as per Ind AS, but as per the gaps prevalent in that country, can I say the fourth condition will fail? The fourth condition in this case will fail. Because A is a wholly owned subsidiary of X, true. A is not listed nor in the process of listing, true. But the fourth condition is that the ultimate parent is presenting console as per Ind AS, but he's not presenting as per Ind AS. Since he's presenting as per the gaps of that country, therefore, he is failing that condition. So in this case, we can say that company A has to consolidate. Company A has to consolidate. He is not able to get a choice in terms of things. Great. Let's now go to the scenario number C. Now, it says in scenario number C, assume the same facts in A, except 100% of the investment held by Mr. X, an individual, instead of company X. Now, the only point which is given, which I did not emphasize earlier, but I am now going to show you something and you will answer. So let me do one thing. Let me just go back and show you something which is there in terms of the clause number 1. It is a wholly owned subsidiary or a partly owned subsidiary of another entity. It is a wholly owned or a partly owned subsidiary of another entity. So what is important is that the company should be wholly owned by an entity. Entity would not mean an individual. So when I say entity, it means it is not supposed to be an individual. So in this particular case, the concept of wholly owned, partly owned subsidiary should be that there is an entity. It could be a partnership firm, it could be LLP, it could be company, but it cannot be supposed to be an individual. And I think if I come back to the agenda, let's come back to the agenda. So when it says that instead of company X, there is an individual Mr. X, then I would say the first condition will fail. Because company A is a wholly owned subsidiary of an individual and not a company. And therefore, in this case, he will fail the condition 1. The status is same. We can say A has to do a consolidation, right? So this was a question illustration focusing on the para number 4A, where we were evaluating the 4 conditions, and I think the major emphasis was on condition number 1 and 4, because second and third condition is not difficult to evaluate. I think if somebody asks me, apparently that it is not listed, not in the process of listing, it's easy. The main focus was on condition number 4 and 1, that the parent company, the ultimate parent, is presenting console as per Ind AS 1 and for public use too. So it should be listed. And it is presenting console as per Ind AS. The focus in terms of the condition number 1 is that you need to be wholly owned or partly owned subsidiary in terms of an entity, not an individual. Okay, that's great. Let's do some more illustrations with you. So let's have a look now at illustration number 2. This is again study material illustration number 2. Let me zoom it further and let's have a look. Now, there is another very interesting clarification which is going to come out of this illustrations on the 4 conditions. So let's have a look at this now. So in this particular illustration, we are given scenario A. Following is the structure of a group company. We can again see there is a chain. So to make it very clear, let's focus on company A and C. I'm not focusing on B. B is not a parent and X is not a parent. The focus is on A and C. Okay, let's put across, is company A in a position to avail the para number 4A? Of course not. I think now it goes without saying that this is a top company, and the company which is on the top of the pyramid in the chain cannot avail 4A. Will it be in a position to avail the concept of para number 4B? Yes, it all depends upon the three-step model, whether it's an investment entity or not. So status is going to depend upon the investment entity status given. Okay, now we're looking at company number C. Would it be in a position to apply the para number 4A? Yes, maybe. It is a chain holding and it's a middle company in the chain. So the four conditions will decide the status, whether he can get the exemption, exception or not. And would he be in a position to do the para number 4B? Again, everything depends upon a three-step model. And in this particular case, dependent that C is an investment entity or not. Okay, so now let's see, are we given any information on 4B or not? It says company A is a listed entity in India and prepares a consolidated financial statements as per the requirements of A. So it is a listed company and is presenting console as per Ind AS. So that means it is public use and it is as per Ind AS. Okay. Company C is an unlisted entity and not in the process of listing any of its instruments in the public market. So till now we can see that first of all, we're looking at number one. C is unlisted, done. C is not in the process of listing, done. A, the ultimate parent, is presenting console as per Ind AS and public use too. Yes, the three conditions met. Now the only thing to be seen is that C, is it a wholly owned subsidiary or is it a partly owned subsidiary? We can see that it is a partly owned subsidiary. So the concept of NOC would come into the play. 60% of the equity capital of C is held by A and the balance 40% is held by other outside investors. And company A does not object to company C not preparing consolidated financials. It says company A does not. When I say company A does not object, that means we're looking at all the investors of no objection. So when it says company A does not object, we can say company A would mean all the investors have no objection to company C not making a console. Am I given any information about the company, A being an investment entity or C being an investment entity? No. So I'm not given any information, therefore I cannot apply the analysis of 4B. I can only answer the question based on the application of para 4A because no information is given on para number 4B. And I think we've got the answers. And Manisha said, so why are we considering on company B the para 4 conditions? Not on company B. We're looking at company C but not B. It very clearly says company C is unlisted, middle, and is not in the process of listing. 60% of C is held by A and the balance is there. All the information is given for C, not for B. So we are evaluating the conditions of para number 4A for the middle company. B is not a parent. For B, we're not applying any para because B is not a parent company, so we're not evaluating anything for B, right? So let's look at the first condition, number 1. Is C a partly owned subsidiary? Yes, it's a partly owned subsidiary. And along with this, we've got an NOC as well. Nobody's got an objection of C not preparing a console. Then we can say C is unlisted company, very clearly given. Condition number 2. C is not in the process of getting listed as well, very clearly given. And the fourth condition is that is the ultimate parent, that is A, presenting consolidated financials as per Ind AS? Yes. For public use, it's a listed company. It is presenting under public use as well. Yes. So he will be able to opt the para number 4A gets a choice. So the conclusion in this case is that B is getting a choice in terms of presenting a consolidation or not. He's got a complete choice, right? And Shruti, so company B pay for A nahi lagega because it is not in a chain. But you see, why are you looking at company B? I think many of you are looking at company B. But a para 4B or para 4A is applicable to a parent. Don't look at the application of 4A or 4B to a subsidiary. ये किसी का पेरेंट नहीं है. अगर आप किसी के पेरेंट नहीं है तो फिर आपने कंसोल बनानी नहीं है. तो पैरा 4A 4B आपके किसी काम का नहीं. 4A 4B उसको लगेगा जो किसी कंपनी की पेरेंट कंपनी होगी. मतलब मैं किसी का सब्सिडी हूं वो ठीक है, लेकिन मैं किसी का पेरेंट भी होना चाहिए. अगर मैं किसी का पेरेंट बनूंगा तभी मुझे 4A या 4B का फंडा लगेगा. राइट? आई होप आई एम वेरी क्लियर. Okay, so this is done. That was scenario number A. Let's have a look at scenario number B. So let's have a look at scenario B and C as well. Sorry, scenario B only, no C scenario. Now, continuing with the same illustration, we've got a scenario number B. Okay, now let's have a look at the same case which we did earlier. Now it says, this is interesting now. Assume the same facts in scenario A except the balance 40% of C is held by B. Please now look at this carefully. I just want to take you diagrammatically back. So he says now the remaining 40% is held by B. So B has got a 40% in C. B has got a 40% in C. Now please hear me carefully. This is another interesting clarification to the condition number 1. Because we've seen in these illustrations a few clarifications coming in. The condition number 1 is that it is a wholly or partly owned subsidiary of an entity. That is one focus. Then there is a concept of NOC. Now there is another clarification coming to the NOC. If 60% of the stake is with A and 40% is with B, do you need an NOC from the NCI? There is no NCI. Because A directly holds 60 and indirectly through its wholly owned subsidiary 40. I repeat, A has got a direct 60% stake in C and A has got an indirect stake in C, which is through a subsidiary. Directly 60, indirectly 40, 100% is with A. So if 100% is with A, there is no NCI. If there is no NCI, no NOC required. No NOC required in this case. So it says the balance 40% is held by C, whether C is required to inform its other owners of B, that is 40% not to prepare a consolidation. He is not asking us to evaluate the conditions. He is asking us to evaluate the condition number 1. He is asking me, do we need an NOC in this case? The answer is no. Because in this case, A is got a direct percentage, that is 60%, and A is got an indirect percentage through a subsidiary, that is 40%. So he is supposed to be having 100% stake in the company, directly, indirectly, right? Okay, so this takes care of the inputs and this illustration is also done. Great. Right, friends, so my entire discussions on the scope of the standard is done. Okay, I hope I am pretty much clear on the agenda. So I think now, before we move further, I want to literally consolidate the learnings of the day before I take it to the next aspect. Let me tell you that I have given you only 2 things for the day. I have given you certain clarifications and I've given you the status of exemptions and exceptions. So the next 5 minutes is going to be crucial before I do any further discussions with you. So please watch this carefully because this will give you an entire picture altogether. So watch this mind mapping now. Relax your minds and watch me carefully in terms of this consolidation. I'm going to create now a mind map in terms of things. This will consolidate the entire learnings of what we have learned today. Trust me, I have not taught you Ind AS 110. I've basically given you the introduction to Ind AS 110, understanding a few clarifications and understanding the exemptions and the exceptions. Let's begin the journey. I started my journey in terms of the standard by giving you a total of 3 clarifications. I started my journey today in terms of giving you a total of 3 clarifications on this standard. Number one, we understood one thing, that when you look at the control assessment, or you look at the joint control assessment, or when you look at the significant influence assessment, the Companies Act 2013 has got a ruled-based assessment. The Companies Act 2013 has got a ruled-based assessment, and if you look at the position in terms of the relevant Ind AS, it is a principle-based assessment. It is a complete principle-based assessment, and therefore there can be a contradiction. Because it is a rule-based and a principle-based, so there can be a contradiction. And we decided that if there is a contradiction, then I need to listen to what? I need to listen to what? And we said we're going to listen to Ind AS. So there is one thing which I gave you, that a contradiction under the Companies Act and under the Ind AS could lead to different conclusions, and you got to listen to Ind AS. And I gave you a reference, that was the rule number 4A of the Companies Accounts Rules 2014. One second. Then I gave you the further inputs in terms of the clarifications, and I said that if you control, or if you've got a joint control, or if you've got a significant influence, and this is on a company, the investee in this particular case is a company, or the investee is a LLP, or the investee is supposed to be a normal partnership firm, which is other than LLP. So do we consolidate these companies as well? The answer is yes. You need to consolidate all entities. And the focus is very clear, that you need to consolidate all entities. I remember somebody asking a question, sir, sole proprietor. Well, you cannot control a proprietor, because the word used is you need to consolidate all entities. A company cannot control an individual. So you need to consolidate all entities. And the entities could be a company, it could be partnership firm, or an LLP. That was the second clarification which I gave you. Then I went ahead and gave you a third clarification as well, which is very interesting indeed. And that is, if you acquire a subsidiary, and this is with the mere intention, to dispose. You have acquired a subsidiary, you get a control, but it is with a mere intention to dispose of the subsidiary in the near future. Then in this particular case, we said it is going to be classified as NCA held for sale under Ind AS 105. Because you would apply the concept of Ind AS 105 and will certainly meet the parameters, because as per Ind AS 105, an already held investment could become NCA held for sale, or an investment acquired with a view to resale in the near future could also become NCA held for sale. And we clarified in this particular case that if it gets classified as an NCA held for sale, consolidated financial statements will be done. Consolidated financial statements will be prepared. So we will definitely prepare the consolidated financial statements, but the only thing is, it's not going to be the regular consolidation. This consolidation will be in a different manner. This consolidation will be done in a different manner. If time permits, we'll give you an example of how this consolidation is done. So different manner, you will do the consolidation keeping Ind AS 110 as well as Ind AS 105 both into account. It's going to be a little special way of consolidating a subsidiary which is covered under Ind AS 105. So these are the 3 clarifications with which I started my journey with you. Okay, then let's take it further. Then after this, I did my discussions with you. I went on to the next level of discussions, and I went ahead giving a discussions on the scope of the standard, that is Ind AS 110. We started making a discussions on the scope of the standard, that is Ind AS 110, and we said that consolidation is mandatory. We said as a basic thumb rule, as a basic thumb rule, we can say consolidation is mandatory. That's a basic thumb rule. But we decided that there are certain exceptions and there are certain exemptions. So in this particular case, we decided in this particular case that there are certain exceptions and there are certain exemptions as well. So we said that there are certain exceptions. And I said, when you're looking at exceptions, it means you get a choice. It means you get an option where you can decide, I want to consolidate or not. And we decided that there are certain exemptions. We decided that there are certain exemptions where you are mandated, where it is mandatory that you cannot consolidate. So this is mandatory in nature, and I clearly told you exceptions are contained in the para number 4A. And the exemptions are contained in terms of para number 4B. So the two paragraphs are different, and one is giving you exceptions and one is giving you the exemptions. Now quickly to come back to the picture. Now we need to get the focus very clear that when you're looking at the exceptions, there were a certain focus points, and I gave you total 3 focus points. One is that this para is going to give you an option. This para applies only when there is a chain holding. And this para is going to be applicable only to the middle company. So these were the 3 focus points which I gave you. I gave you 3 focus points that number 1, this is going to give you a choice. That is an option. So first, you're going to get a choice in this particular case. That is one. And second, there is going to be application when there is a chain and if it is a middle company. And along with this, we give you a total of 4 conditions as well. I give you a total of 4 conditions, and if I start looking into the 4 conditions, now there are certain clarifications which we have done. And the clarifications which we have taken a note of is, number 1, either you tell me it is wholly owned subsidiary, or you tell me that it is a partly owned subsidiary. If it is a partly owned subsidiary, we need to get an NOC as well. Either it's a wholly owned subsidiary or it is a partly owned subsidiary. Through the illustrations, we got another focus point that it is a wholly owned or a partly owned subsidiary of an entity. That is one focus points we have got very clear, that it is a wholly owned or a partly owned subsidiary of an entity. And we've also seen a clarification on the concept of NOC, that if there is a direct indirect percentage, if there is a direct indirect percentage resulting in no NCI, it implies no NOC required. So we saw that in 2 different illustrations. So these were 2 things which stems out of the illustrations, that the wholly owned, partly owned is of an entity. NOC, in which case, is not required, because in this particular case, you can say that this is a situation where there is no NOC required. Then the second condition is that it is not listed. That is pretty simple and straight. The third condition is it is not in process of listing. It is not in the process of listing either. It is not in the process of listing. And remember, tomorrow, I'm going to do an interesting question with you. Please revise all this, because tomorrow I'm going to do a question which came in the RTPs. It's there in the education material also. It'll testify all what we learned today. And the fourth condition is that the ultimate parent, or we can say the intermediate parent, the ultimate parent or the intermediate parent has to present consolidated financial statements. And there are 2 things. He needs to prepare consolidated financials as per Ind AS 1. And the other condition is it should be available for public use. That is 2. So 2 focus points very clear, that this is consolidation as per Ind AS, and number 2, it is public use. So in this particular case, that is one focus point. Then finally, coming to the concept of para number 4B. Now coming to the concept of para number 4B, we got this very clear 3-step model. So in this particular case, we had certain focus points again. We had certain focus points here as well, and there are three focus points in this particular case. Number one, the concept of para 4B is mandatory. That is one focus point. Whether there is a chain or there is no chain, it can apply in either circumstances. And number three, everything is dependent upon a three-step model which I gave you. So the three-step model is focusing on the concept that it has to be an investment entity. So the focus point is mandatory chain or no chain holding, but what is important is the parent is an investment entity. Only then I start triggering things. And then I gave you in terms of the three-step model, the focus point is very clear. And the focus point is you need to see that the parent company, should be investment entity. You need to see that the subsidiary company is supposed to be investment entity or not. So the focus is to see whether the parent is investment entity or not, the subsidiary is investment entity, and then the focus is to see that the activities of the parent and the subsidiary is same or not. So we need to see that the activities of the parent and subsidiary is same or not. So these are the three focus points in terms of the step number 3. So what is important is we decided all the permutation combinations. Parent is investment, subsidiary is investment, consolidated financials not applicable. Parent is investment, subsidiary is not investment, activities are not same, therefore consolidated financials not applicable. The parent is investment, subsidiary is not, and yes, they do same activities, consolidated financials becomes mandatory. So that was a summary of all the inputs which I have discussed with you today. So please do revise all this, because tomorrow, before I'll take it further, I'm going to do a comprehensive question with you based on this. Don't worry, all this will be uploaded to you, the mind maps. So tomorrow I'll first do a question with you on this area, and then I'm also going to start my journey on control assessment. I hope, friends, I am quite clear. Okay, Kriti, sir, thank you so much, sir, for giving us deep understanding of concepts. Three-step model and mind maps makes the concept easy to remember and for revision. Thank you indeed. Thank you, Kriti, so much indeed. The idea is that, once you have these notes handy in front of you before the exams, trust me, it's going to be very easy to revise as well, because in financial reporting, I know there is a lot of plethora of data which one needs to remember, and I think this is going to be quite helpful indeed. I trust me, it's going to be definitely helpful indeed. Right, friends, so far so good. So on that note, I think we come to an end. And Viraj, sir, thank you for clearing concepts, para 4A, 4B. Thank you indeed. Thank you, Viraj, indeed. And thank you, all of you. So let's see if any questions coming in. Otherwise, I think we're going to call it a day. So please do remember to revise all this, because tomorrow we're going to start with a small little testing of the concepts. And then our focus is going to be on the control assessment tomorrow. Right, I guess so far so good. I don't think so. We are getting much more. Okay, thank you, Suraj, for the great session. Thank you. And Shruti, thanks for repeating so many times. Thank you so much. Thank you, Shruti. Thank you, all of you. That was wonderful interacting with you as usual. So at that note, see you tomorrow, friends. Thank you. Bye-bye and take care.